Good afternoon, everybody, and welcome to another edition of 18 Minutes with 180 Markets. And today we have a really exciting interview because, it's so important not only to be in the market or out of the market, but to be in the right sector of the market. And one of the hottest sectors right now is the gold sector, with the yellow metal hovering around $1,700 an ounce. But what's also really exciting is to find the right company. And with us today, we have Rick Yates of Middle Island Resources. And Rick is experienced professional with a deep amount of experience in this market. And Rick, welcome to the show.
Thank you very much, Craig.
Okay. Hey, Rick, I always like to start out with people's backgrounds because it really gives a sense of, where they came from. You've worked with big corporates. You also had your own geo consulting business, RSG, for many years. And maybe just tell us in your words a little bit about your journey and specifically, what brought you to Middle Island and to the Sandstone region. What do you see there?
Yes, by all means, Craig. Look, I'm a geologist by background. Graduated in 1981 and worked for a few years with major companies, predominantly in a contracting roles. And then worked for 6 years for AMEX, which became AMEX Australia, Ultimax Resources, and so on. I've worked in every state in Australia, and subsequent to that, to AMEX, myself and another chap established a small goldfield-based consulting group in Western Australia, and we grew that into an international business over about a 20-year period, and ultimately sold that to Coffee International for a cash and share transaction. I stayed on for 3 years until the handcuffs came off, and then moved on to the next thing, which was Middle Island. So 23 years as a consultant, and certainly had the very fortunate to have the opportunity to work in 37 or 39 different countries globally.
Wow.
We built that into an international business, and probably about 1,000 projects or something like that I've worked on over that period. In 2010, we started putting Middle Island together, centred on West African gold assets originally.
Really? Okay.
Because I'd done a lot of my consulting work in West Africa. And, and we did very well over there, but fell foul to some extent of some of the sovereign issues. And the shareholders were sort of pretty keen to see us back on home soil. So we spent about 18 months looking for an appropriate project back in Australia, and acquired the Sandstone project in 2016.
Okay. As I say, that gives me a good sense. And, maybe just drilling into that a little bit, what specifically in the Sandstone region attracted you? Because obviously if you've worked in 37 or 38 different countries, there certainly has to be something that you saw, sovereign issues withstanding. What attracted you to Middle Island, to that region?
Look, I guess several things. One, the prospectivity. Sandstone lies sort of between the two main gold belts in the Western Australian goldfields, being the sort of Eastern Goldfields and Murchison belt, and
Right.
And therefore had received less exploration attention. And a lot of the work that had been done was focused very much on very shallow deposits, and very little had been done on looking for extending those in the down plunge direction. And as any good goldfields geologist will tell you, the longest dimension of any deposit will invariably be the down plunge dimension. So that was certainly part of it. The other was that we were very much looking for an advanced asset, which we could bring into production relatively quickly. The Sandstone project includes a processing plant and all the associated infrastructure, permitting pretty much all in place. So it was very attractive from that perspective as well.
Right. And so certainly there were some very, very, specific issues there, it sounds like, because you probably could have gone anywhere in the country that attracted you to this project. And, within the project itself, currently I think we're sitting around 624,000 ounces of resources. Is that right?
624,000, yeah.
Yeah,
In
and,
resources.
and
Right?
and look, the news flow seems to be every day, especially for the last month, has been a bonanza. You know, I think that in April, literally every week you put out, 1, 2, 3, 4 in a row of successful drills. Maybe can you just touch on that a little bit about, what you're seeing right here, right now?
Yes, look, indeed. Look, I guess the strategy is to build the front end of the production schedule and to make
Right.
it more robust. And then by the front end of the production schedule, I'm really referring to open pit deposits. So,
Okay.
well, we've got 2 good underground discoveries to follow.
Yeah.
By definition, we'll be looking at recommissioning on the basis of the open pit deposits. So, several of these were targets that we've identified previously, and just by virtue of the junior equity markets, really hadn't had the financial resources to be able to do them justice.
Right.
So we're fortunate to secure a cornerstone investor back in the latter part of 2019
Okay.
that allowed us to raise sufficient capital to be able to embark on a more systematic large drilling campaign during
Yep.
the current half. And
Right.
so we've been doing that, and look, fortunately, we've been victims of our own success to some extent because we'd only budgeted on one of those new targets actually coming in for us. And so far, we've identified 4 new deposits in that lot.
Are you
And
surprised that just, yeah.
by virtue of that, we've underdone the budget. And so we've had to just recently went back to the market to raise additional capital to make sure we can complete our stated objectives, i.e. that major drilling campaign to
Sure.
bring those resources to bear on an updated feasibility study, which we've necessarily had to push out into the September quarter rather than the June quarter as originally planned.
Right. And let me ask, based on all your experience, it sounds like it, but are you surprised at just how successful the program has been so far?
Sorry, can you just repeat that again?
Yeah, sure. Are you surprised at just how successful the drilling program has gone so far?
Look, I guess in one sense I am, in that, look, exploration's a pretty tenuous game at best. And so, normally you work on a sort of a 1 in 10 ratio to get 4 out of 8 really so far.
Yeah.
Was significantly better than the usual odds. So look, we have been pleasantly surprised by that. And
Right.
look, it's a great problem to have. Yes, we had to go and raise more capital. Yes, we have to push the pre-feasibility update back out into the September quarter. But look, along with that, we're almost a certainty that we'll be in a position to recommission that processing plant once we do bring those resources to bear on that study update.
Right, because right now, within the last capital raise, I know you're going for between 2 and 4 million. You raised, at the upper end of the range there at 4 million. So
Yep.
just going through the math, do you think that takes you through the PFS where we should get some type of announcement towards the end of the year, Q3, Q4?
Yes, look, I would certainly like to think so. I can't guarantee anything, but look, from where we sit at the moment, it's a highly likely outcome. We'll certainly
Right.
finish that study work, and we would like to think that there'll be a positive outcome on that, and that subject to funding the recommissioning itself, and we're certainly advancing discussions around that,
Right.
then we would be in a position to recommission that project late this year or early next.
Right. I mean, right. So there's a clear pathway here obviously, one of the key areas is to make sure you have all the funding in place, and it sounds like that is
Yep.
pretty well sewed up. And then also, I guess, just again, going more to the details, bringing it from a resource to production, it's a bit of a ways right now. Maybe talk about, there's really, one of the interesting things around Sandstone, your project and specifically, there's really no other game around within 150 kilometers of you as far as from an infrastructure and processing point of view. Do you maybe want to touch on that a little bit?
Yeah, no, that's right. And one other thing I meant to mention too, the recommissioning time frame is about 5 months. So it's 1 month for contractor mobilisation and 4 months for the engineering refurbishment work. And that's pretty consistent with the time frame we'll require for pre-production mining to build a stockpile for recommissioning. But look, in terms of the opportunity, we are the only plant for 150 kilometres, and there are a number of stranded deposits within about a 100-kilometre radius of us that logically belong in that plant. And we see a significant opportunity to consolidate some or perhaps even all of those, whether that's via toll milling, whether it's production sharing, whether it's asset level consolidations, whether it's corporate consolidations. Horses for courses really in that respect. But look, there is a bigger, longer term strategy. But given what we've got with the open pit initially and then the underground deposit to follow, we're reasonably comfortable that we'll be in production for a considerable period in our own right. But it's not to say that the economics of that project might not be enhanced by joining forces with others, toll milling, whatever.
Yeah, no, that's what I was saying. It just screams of that. Sure, absolutely. And in your, I guess, in your blue sky scenario of going from where we are today to full on production, what would that timeline be? Without getting ahead of ourselves.
Look, probably getting ahead of ourselves a little bit, but look, it'll be a fairly modest production start in terms of quantum. I would think sort of the order of 25,000 ounces, increasing to about 40,000 ounces per annum, and ultimately getting to about 80,000 ounces per annum.
Right, and in the life of mine, would you extend, down the track, would you extend it out by going underground?
Absolutely. Look, we're looking at minimum 4 years of open pit production, and we suspect we've probably got considerably more than that based on the recent work. But we'll wait until we get the pre-feasibility study results first. And that would give us bias time basically to do further work on the underground deposits and actually do the development work necessary for those. One of those deposits will be a sub-level cave back into an open pit, which we will look to be mining first. So clearly we need to complete that open pit before we can commence production on that sub-level cave. Yeah.
Right, and what is and again, I don't know how far out you're modeling or not, from a cost perspective, where would you sit on the cost curve? And obviously the open versus underground would be, I suppose, different pricing.
Look, I guess by virtue of the, generally speaking, lower grade open pit ounces, and indeed some of the underground or one of the underground deposits being relatively low grade, we would probably sit in the third quartile in terms of cost. So it's not super cheap, but certainly at these gold prices, we believe there's a considerable margin in it. Yeah. Right,
and also I suppose the benefit from touching on your experience in West Africa of having great rule of law here in Australia certainly makes it an advantage.
No, certainly a lot of certainty about the jurisdiction. And look, I spent a considerable period. I lived in Kalgoorlie for 13 years, so I do know the goldfields very well. So I've certainly got a very good understanding of the goldfields, both in terms of the technical potential and also the economic equation around projects and so on. So look, we're pretty comfortable with all that at the moment, but certainly excited about the potential that's offered by the underground deposits we've defined, and the opportunity to utilise sort of the latest and greatest technology in terms of enhancing that to bring them into compatibility with the existing process plant capacity.
Right.
I guess there I'm specifically alluding to ore sorting being the key to unlocking the Tonalite Deeps deposit. And look, the resource extends down to 500 metres at the moment. We've drilled it down to over 700 metres. It's still open below that. So it's a very, very significant deposit.
Right. And speaking of, you mentioned about the technology. In the last, decade, has technology changed to such a degree that it gives you more certainty around your drilling or helping on a cost lower cost of lower cost curve?
Look, certainly, technology's played a big part in sort of lowering production costs and things like that. In our instance, in our case, the ore sorting is proving to be the biggest winner in that respect. In that the 2 Mile Hill tonalite deeps, 99.6% of the gold is hosted within sheeted quartz veins within the tonalite plug, and the grades of that are circa an ounce in the quartz veins. So if we can sort the quartz veins from the tonalite host, that's a significant win in terms of the mill feed then becoming compatible with the mining rate and the processing rate, and significantly increasing the mill feed. It reduces haulage costs, it reduces power consumption, and thereby significantly reduces process operating costs. It reduces tailing requirement for tailings. It reduces water usage, etc. So there are multiple benefits that sort of accumulate as a result of the success with that, with the ore sorting that we've had today. And there is more work to do on it. We've done 2 commercial scale trials. We've got a 3rd commercial scale trial to come. And the indications are from bench scale work that we'll get another 5 to 10% improvement on what we're currently doing at the moment from the first 2 commercial trials. That's
terrific. That's amazing. Rick, because of all your success at Sandstone, maybe it's being overlooked at this point, but you have another project, the Barkley project up in the Northern Territory, and I think that just like that there are free options and placements, this may be a free option within your business. Can you touch on that project a little bit, because it's at this point it's not getting a lot of attention in the market?
Yeah, look, certainly, Greg. And look, at this stage, it's very early days, but we did divest the last of our West African projects, which completed last calendar year, and that really gave us the opportunity to have a second arrow in our quiver, and we're very keen to we've noted that a lot of the junior funding in a tough equity market was coming from major and mid-tier companies, joint venturing and funding exploration of juniors, and that really involved a large portfolio of properties, a big picture stuff, tier 1 target potential, and so on. So we're really about looking for access to something that fitted or ticked those boxes, if you like. And it's a story we had been following for a couple of years, but there's through the Northern Australian, I forget what they call it now, but funding program sponsored by the federal government, but also contributed by the state governments. There's about $30-odd million of that is focused on what's called the East Tennant project, and it's looking at tier 1 IOCG potential along what's called the East Tennant Ridge, which is a sinuous fault-bounded ridge which runs from Tennant Creek to Mount Isa, effectively, and it lies beneath the Georgina Basin. So it's not dissimilar to the Paterson Province in Western Australia, where you've had discoveries like Winu and Havieron. It's not dissimilar to Northern Victoria, where you've had significant discoveries, gold belt discoveries sort of beneath the Murray Basin cover. So it's very similar to those. And look, we've applied for and had accepted 10 exploration licence applications, roughly 3,500 square kilometres, which extend over about a 300-kilometre strike length of that East Tennant Ridge, primarily focused in the Barkley area, where that ridge is modelled to come closest to surface. And look, clearly the merits of the strategy have indicated we're in good competition with the likes of Rio Tinto and Newcrest Mining in competitive situations there. So that's, certainly vindicates A, the target identification, and B, the strategy overall. And those tenements are not yet granted. There's still applications they have been accepted and they're going through the usual heritage process and so on now. We don't anticipate them to be granted before about August this year. So okay. it's a sort of a longer dated option, and we would look to do some initial cheap, in relative terms, detailed geophysics to refine the targets that we focused on when we made those applications, with a view to then perhaps looking at getting a joint venture partner in to do the more expensive deep drilling required beneath the Georgina Basin to test those targets.
Yep. Well, Rick, that's about 18 minutes, and it sounds really exciting. And just to recap, you have, a phenomenal amount of experience. Sounds like, there's a really great asset with a lot of good news flow. You're funded well and got good infrastructure around you and optionality up in the Northern Territory. So it's a good story to tell. Obviously, the share price is reacting positively over the last year to it. So, with that, keep up the good work, and we look forward to speaking with you again.
Thank you very much indeed, Greg, for your time and your interest.
Okay, bye-bye.